Welcome to African Financial Analysis, and in this segment I'm going to talk about what's been driving the commodity and currency markets in the past few months. There's been two real clear themes going on. One has been worries about a slowdown in China, and the second has been over in the US, the Federal Reserve signalling that with an improving US economy, they're going to start to withdraw liquidity that has been in the global market for about the last 5 years. How does that affect Africa? Well, I think it was one clear example. If you look towards South Africa, what's happened to the currency, what's happened to the commodity markets, it gives you a clear indication how this can affect countries in Africa. Nowhere has these moves been more evident than in South Africa, the value of the rand and also the price in commodities. The rand has fallen by 20% in the last 12 months. Why is this? Well, as I mentioned at the intro, the US have signalled that they're going to be withdrawing the liquidity that they've pumped into the global economy. So for the past 5 years, there's been a hot flow of money into emerging markets, looking for a better return than you can get in the traditional safe US Treasury market. As that changes and sentiment changes, that money is being withdrawn, and South Africa is still classed as an emerging market with a slight risk element to it. And because of this, the rand has really plummeted 20%, as I said, in the past 12 months alone. What does this mean for South Africa? It's not great news because South Africa is a net importer, which means they need to import more than they export. So with a weak currency, the price of your imported goods goes up. And companies are faced with two choices. They either put it onto their balance sheet, which hits their profits, or they pass it on to the end consumer, which means prices rise, which means wages rise. And you've already seen civil unrest in South Africa at 2 or 3 of the large mines where workers are demanding higher salaries. And with an economy running at 25% unemployment, a weak rand is not great news. The South African economy is going to continue to struggle. I still see the value of the rand falling further. South Africa is caught between a rock and a hard place. The slowdown in China and the demand for its hard minerals, obviously gold being one of them, copper and platinum, and the US, that, like I said, is withdrawing liquidity, and this is affecting all emerging market currencies. The price of gold. Most African miners are looking at $1,000 to get gold out of the deep mines in South Africa. It's currently trading at $1,200. It would only need a further correction to below $1,000, and most of the mines in South Africa will continue to lose money. So I think the outlook, like I said, for South Africa is uncertain, but again, there provides opportunities. If you're looking to get into South Africa as an investor, then obviously the equity market, the real estate market, and commodities have never been cheaper. Again, how will this affect Mauritius? Well, obviously South Africa is an important part of the Mauritian story, and investors in South Africa will also all of a sudden find it's become fairly expensive, not only to invest in Mauritius, but anywhere outside of South Africa. But it does provide opportunities, and I think there's still going to be a good two-way flow of investment. But it does show, even if we're only in Africa, we're trading in Africa, we're looking to open up new markets in Africa. It is events outside of Africa, the US and China, that can really affect your local market and local economy.